Qualcomm has achieved several successful product launches in recent quarters, and those are helping the company gain market share in its very important categories, including smartphones and personal computers. I'm going to go through some of those in this video, as the reasons why everyone is talking about Qualcomm stock is because their surprising success in these categories better than what management was even expecting. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So starting with the Samsung Galaxy S25 series of smartphone, which will be powered by the Snapdragon 8 Elite, which is the Qualcomm product for the Galaxy globally. So that's a huge win for Qualcomm, a design win that goes into these phones that are gaining market share worldwide. They said, the management team said that they are encouraged by the number of AI features, which has nearly doubled in the Galaxy S25 series. And we expect the strength to continue as part of the transition to AI smartphones. The interesting thing to note here is the number of AI features, which has nearly doubled. That's the trend that's helping Qualcomm right now. Is the number of smartphone sales is not increasing. It's hardly budging at all. But what is increasing is the capability of these smartphones. And that's helping Qualcomm generate higher average selling prices for its products that go into the smartphones. And it's also able to sell more of its product into the smartphone. So while the total unit sales for smartphones is likely to be either unchanged or very slightly up year over year, Qualcomm expects to generate nearly double-digit sales increases in its smartphone segment because of that trend line I highlighted earlier. So Qualcomm said that they are very pleased with the design traction and strong end customer demand for the recently launched Snapdragon Elite powered flagship smartphones by the Chinese manufacturers. And the Chinese original equipment manufacturers for the smartphones, they've been gaining significant market share at the expense of Apple. Apple's been losing market share, especially in the last 3 months in China. And that's been good news for Qualcomm because Qualcomm's relationship with Apple is ending. So Qualcomm would prefer that its other providers, where it stands to have a longer term relationship, benefit at the expense of Apple. Qualcomm also mentioned that they've already achieved 80 design wins in personal computers, and they only recently entered this business. It's only been about 6 months. And these designs are in production or development in their category leading Snapdragon X series platforms, and they're targeting more than 100 designs to be commercialized through 2026. They already have PCs that are going to be powered by the Snapdragon X from leading manufacturers including Acer, Asus, Dell, HP, and Lenovo in the coming months. And I suspect in this category, which again is very similar to the smartphone category in that in the longer term, PC growth is expected to be flat. But in the near term, there's going to be a big replacement cycle that's going to burst sales. And at the same time, I expect Qualcomm to gain market share. And already they've demonstrated significant market share gains in their early days in this category. And in this category, it's coming at the expense of Intel. That's the company that's losing market share here at the benefit of Qualcomm. So they talk about that here. They're still in the early phase of transition to PCs, but they like the initial traction. According to Circana, in December, Snapdragon X series had more than 10% of market share in $800 Windows laptops, $800 and above Windows laptops. Qualcomm's Snapdragon powered laptops already gained a greater than 10% market share. That's great news for Qualcomm entering into this massive industry. For them to already have a 10% share in this market, that's great news. That's impressive. And that's certainly one of the reasons why I'm attracted to Qualcomm stock right now. I have it rated as a buy. and I've had it rated as a buy for some time. It's trading at a relatively cheap valuation, and it's demonstrating phenomenal skill in entering new categories and achieving great success early on in new categories. So, in virtual reality, even, they remain the preferred solutions for virtual reality, mixed reality, augmented reality, etc., across major manufacturers and ecosystems. They have a long term collaboration with Meta platforms, and other key partners are playing a key role. The Snapdragon based Ray-Ban Meta glasses continue to exceed expectations as they adopt more AI features. And Qualcomm is optimistic about this category. They see this category hitting an inflection point really soon, and device sales are expected to increase in this segment where Qualcomm has a stronghold already in the early days. So at the Consumer Electronic Conference, they introduced their AI on-premise appliance and inference suite, which enables generative AI inference and computer vision workloads to run on dedicated on-premise hardware, allowing sensitive customer data, models, and inference loads to remain within the enterprise. This is for companies that have, let's say, a manufacturing facility, and they don't want these computations that are going on in the manufacturing facility to happen in the cloud because they're afraid of their data being leaked out. And remember, for manufacturing companies, their process is the secret. The process in which they employ to manufacture whatever it is that they're manufacturing, that's the secret sauce. That's what enables these companies to generate the profits that they generate. And they don't want these processes being computed in the cloud where they're unsure of the security. It's never 100% secure. Neither is on premise, but it's more secure than being shifted over to the cloud. And interestingly, this is a category with artificial intelligence that has potential to generate more use cases and generate more revenue because of the real world impacts it could have. If an AI can help a manufacturing facility produce their widgets at 5% lower cost, that's a big boost to the bottom line. That's a big boost to their competitive advantage. And so, of course, they'd be willing to pay Qualcomm for their computing technology so that they can enhance their business by 5%. And my intuition is that the gains are going to be much more than 5%. But even just at 5%, it makes sense for them to employ and deploy this technology because of the competitive advantages it gives companies, and because if they don't use it and the competitors use it, they could fall behind. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.